Oh gosh, Stella Cox is a middle-aged woman that's worked in the City of London and specifically in Islamic financial services for over 30 years. Yeah, I think most people define me by my day job, I would guess. But outside of that, I have a number of now adult children. I live in London. I've lived in London for many years, and yes, I work in the city. It's very kind of you. I wouldn't describe myself thus. I would say that nowadays I'm one of many ladies of Islamic finance, because I've just seen now that the listing of influential women in Islamic finance has reached beyond 300 people. Fantastic. Which is quite a big progression in recent years. I think sometimes I'm described in that way because of my longevity and the fact that I've been connected to the Islamic financial sector since the mid-1980s. Certainly. Well, my earliest involvement dates back to the mid-80s, probably just before the mid-80s, and I joined a British merchant bank called Kleinwort Benson. That was a traditional merchant bank. I think now in financial services, not many of us remember the merchant banking model, but actually in those days they were institutions that focused on lots of different, quite individual businesses and their ability to connect and work together to empower and create quite an interesting financial services offering in aggregate. So the merchant bank that I worked for was several centuries, could trace its roots back several centuries, was very engaged not just in the UK and domestic markets but in international markets as well. I was hired initially to work for the Japan corporate banking desk, and interestingly at that time the division that I worked in pretty much included every international banking desk outside of the UK. Next to me was the Middle East banking desk, and this was 1984, I think I said, and very interesting that even at that stage there were colleagues who were working on Middle East banking who were actually engaged with the early contemporary Islamic banks, particularly in Kuwait and the UAE, I think, and they were working on creating asset flow to manage the liquidity that was being gathered by those Islamic commercial banks through their own fledgling business models. So I was working next to the desk. I was on Japan corporate banking, as I said, and over the next little while it looked as if it was a pretty exciting, innovative and unique environment to work in. So I asked whether I could join that team. Okay. In the 1980s, it was quite interesting because the initial Islamic financial institutional model, the contemporary model, was being funded predominantly by ultra high net worth individuals, and those typically from Saudi Arabia as well. And two conglomerates had grown up that were engaged in financial services. One was Dala Al Baraka, and the other one was Dar Al Mal Al Islami. And interestingly, my bank, Kleinwort, had banking relationships with Dala that predated their foray into Islamic banking, and it seemed that at some point, probably towards the late 70s, the group came to them and said, look, we are realigning, explained to them what their understanding was of Islamic financial practice, and said, we are going to move away from the forms of financing and monetary management that we have access to at the moment. And we are looking to create other solutions, which seemed to my colleagues at the time to primarily relate to trade finance and actually looking at asset-based investment and asset-based and backed banking transactions that would generate profit for the client rather than placing funds on deposit or whatever through sale and purchase of physical assets. Now, Kleinwort, I mentioned, was a merchant bank, and that meant that merchant trade, trade finance was actually a core focus for the bank as a London institution. So it seemed that the infrastructure that the bank had and its access to asset origination was appropriate for those institutions. At the same time, in the late 70s, there were various Islamic banks that were being established predominantly in the Middle East, and literally they were, it sounds amazing now in the sort of global environment, financial environment in which we work, that these banks were being created as standalone institutions. And some of the earliest that I can think of were Kuwait Finance House, which wasn't authorised as a bank in Kuwait, but it was pretty much like a bank. It was working as if it were a consumer and commercial banking institution. And there was also Dubai Islamic Bank in Dubai, and not too long after that, Qatar Islamic Bank and Jordan Islamic Bank, which were probably incorporated in the early 1980s. So those institutions, despite the fact that they were building on a standalone basis, and nowadays, you know, it seems impossible to think of any major financial institution being created without the connectivity it might have naturally into markets and into peers. But those banks were gathering or mobilising significant amounts of liquidity through retail customers, and they were looking to find assets to deploy that liquidity into, and also really to grow the scale and the infrastructure of the institutions themselves. So I think that's where London comes in, because the banks did not really have access either to peers in their local markets. Most of them were standalones in one particular country or another, and they were struggling to find the asset flow to invest in, and also the mechanisms that would allow them to manage their liquidity, to access liquidity if they needed to do that in an organised, reasonable and efficient way. And they tended to turn to the international banking relationships they'd had before, provided, and they tended to be conventional banks, those banks could provide solutions that were Sharia compliant as well. So that's where the structuring challenge was at that stage. And if I think back to the early 80s, in London there were 3 banks that were involved in this at the beginning, and those were Kleinwort, Citi and ANZ Greenlease.
And was it a case of literally, we need treasury style facilities to manage this liquidity, can you structure for us? Was that the mindset? We have this existing conventional relationship, can we get something there? Or tell us a bit more about the nuances there that were happening.
It's a good question. Actually, I think the profiling of transactions so that they resonated in terms of treasury facilities and treasury management were probably a little bit off of central agenda. And it was really banking disciplines and sort of banking structures, transactions, instruments that were more relevant, because it was more of a matter of managing investments rather than looking at an equivalent sort of treasury placement. They were actually investments in trade finance flows at that time, and it was a matter of using banking instruments, you know, third-party guarantees, letters of credit, etc., to ensure that there were appropriate levels of credit support for those transactions, so that the banks were not taking inappropriate levels of risk, and there was certainty to an extent, and again permissible under in terms of Sharia as to returns that were being earned and profit that was being earned through asset-backed transactions. So I would say initially, actually, we were some way from the sort of treasury and capital market references that we see for Sharia compliant liquidity management nowadays, and we were looking very much in core banking space. Certainly at Kleinwort, the business originated in the international banking division, and certainly in the other banks that I just mentioned, the international banks, I would say similarly so. Most of these businesses grew up within their banking departments.